stars on IZSS, but I saw somebody did have them on there the other day. I'm actually about to start testing some new stuff with IZSS with the order prints and all that to see what comes of it. All right, let me see what we got. Stars is just order prints with everything but the stars turned off. I use Apex for an entry if I have other things that say I should do. The main requirement is that the MVP has to be lined up. MVP line. But then I'll also look at, volume and all the other fun stuff that we have. Like here's a VAD's a great thing. You get a VAD with it. Or if you get stars with it, it'd be fantastic. But I like the reason I like the continuum bars, time factor in. I mean, this was years ago, but by adding a time factor in to the bars, and a little bit different, settings combined. Like there's another apex. There's an entry right there. An entry is simply you sell 3 ticks below the E if the MVP, this is dotted line here, is lined up. Go short and trail it or target a level. Well, tell me what a wick entry is, John. Well, that's a scalp trade. So that would be a seize trade. It's a completely different system. So tell me whether you would rather. Do you ever play golf, John? Do you know anything about golf? Like a little bit? Okay. So if I said, would you rather use a sand wedge or a driving iron? What would be your answer? Or I could say, would you rather use a putter or a driving iron? There you go. Okay. So it depends on the condition. Is a putter better than a driving iron or a driving iron better than a putter? No. They're both meant to hit the ball. They're just a different club for a different purpose. Well, most people use seeds to scalp. You can trail with it. But I mean, there's not an answer. I can't tell you would I rather have this over this. I mean, if I'm looking at the chart, I like that apex entry. There's like if you're searching for that which one's best answer, you're never gonna get it because there's no such thing as best. It depends upon when. You can trade with seeds. I'm just saying a lot of people do. There's no reason to argue. You can use it however you want to. As long as you're rocking and making money, then keep doing it. Right? I was simply answering the question, would you rather have an apex entry or would you rather have a seas entry? There is no answer to that. It just depends on what I'm looking at. I do know that I like the continuum bars in order to allow me to get more. I can see more of what's going on in oscillation versus simply having a bar go up and down, up and down, up and down forever. But notice I always have them all open. I think that's one thing that people miss is, I'll have them up and going. It's not like I don't have the Seeds chart open and the IZSS chart open. The Darrell pattern chart, whatever. That makes sense. Here. Are there any niche markets I don't trade? I don't. Now, for me, I don't trade them because they're not worth it because they move so slow. They're great for a trader who's wanting to put some wide money in the market, but the leverage is just so low. I don't trade silver and I don't trade copper on NASDAQ on the spreads because it takes 50 silver contracts on NASDAQ to equal one silver future. It takes 25 copper contracts to equal one copper because of how they tick in comparison. So those are the two that I just don't trade. I can trade them on the binaries, but I won't trade them on the spreads. How do I use the diagnostic bars? I put them on a Seeds chart and I put them on an order prints chart. How do I use diagnostic deviation? That one I covered yesterday in the room, but just for another quick summary is, and I'll do it real quick. The diagnostic deviation indicator is plotting a retracement from the low or the high. Okay, so this one is a one deviation move. That's what one is. Okay, so how far does the market come off of the high? Like the high pulling down at this level, it hit a one deviation move. How far does it come off the low? Is the red. So, and then the blue line here is the highest level set for the day. So all that does is it simply lets me see possibly a deviation marker where there's nothing there, like where nobody else would see anything. Okay? So someone else may not see any kind of marker, and I'll see, hey, there's a one deviation level. I just want to be aware of it. Doesn't mean I'm not going to trade because of it, but it's, hey, pay attention. Remember, the first thing I look at is levels. I did the 4 things I look at last Monday. I said levels are the first thing I look at. So I'll look at where are we at right now, where are the deviation levels at, where are support resistance, where are magnets, where are ice zones, where are mini magnets on order prints, things like that. So it's a be aware. And just about everything is a be aware. And then when a lot of things say be aware, then you usually get a signal. Right? You're looking for the word of the day. Probably the number one word in trading is confluence. Multiple things lining up telling you the same thing. Taking trades near big magnets. It didn't plot the magnet for me. Okay, I took this elevator swing confirmed by a star on order prints. I don't see your order print chart. That would be helpful. gotta let's see stars if you want it. That way you can have the stars right on there. But also just having the order print chart would be really helpful when comparing them, especially for teaching a lesson. And VAD E is right here. I don't know what you mean by it. There's VAD A divergence, got that. Yeah, you had a lot of things lined right up. So it went 9 ticks on you. Now that is a potential apex, but not a locked in one. Like that's what's called a reversal apex, which you never trade. I never trade reversal apexes. I trade after the reversal apex. That's why it's a white or green. But yeah, that trade just lost. Happens. Let's see here. But yeah, you don't have the big magnet plotted, and I don't have your OP. So you're telling me two of the things that you're trading with, and you're not showing them to me. So that makes it a little more difficult to talk about there. I'm doing this one. Got 8 ticks for a 24 tick pullback. You shouldn't have a 24 tick pullback on a swing. It should be a lot tighter. Stops. So, Mike, John, I am going to tell you, if you have a question about C's, to ask Lori. Because that's Lori's system. Have you asked Lori about these specific charts? And did you take all the other trades that are sitting on the chart? Or did you just are you just showing the 3 ones that lost? And are you saying you've only netted 14 ticks? Hello, John? You have to move on if you don't reply. I'm trying to help you, man, but you got to reply to me if I'm answering your questions. Mike Smith 13547. Are you present? Okay. I'm all about helping, but I gotta have feedback. So we're gonna move on. I'm sorry, I gotta have feedback so I can help. Let's see here. So I'm gonna go and close those out. And Mike Smith, if he gets back in, if he wants me to relook at stuff with him, I will. But I gotta have more than silence whenever I try to help you out. Okay. All right, so moving on, because John's not replying to any of the questions that I'm asking him. What do we got, Chris? What is better for starting out? NASDAQ, YM. I would say Dow, because NASDAQ has a bit more. One, I would say have like NASDAQ, Dow, S&P, and Russell up at the same time. Okay, Chris, because being indices, they normally move in lockstep. All right. The Dow is going to have less of a implied volatility factor impacting premium. Okay. NASDAQ is more likely to have more of it, so you're really going to have to pick those daily bigger spreads. Okay. Some people find that they don't like NASDAQ because they feel like it doesn't move as fast. It's because it has a lot more premium built in, because it's a lot more volatile indice. I like that personally. That's a lot more volatile indice. But that also causes more implied volatility, which impacts premium pricing on an option. So the Dow is probably going to give you less of that, but the NASDAQ is going to give you more movement. So you're going to have to sort of pick your poison, if you will. But if you're finding that it's not moving fast enough for you and you're choosing those daily spreads near the market spreads like I talk about on NASDAQ, then I would switch over to either the Dow or the Russell. Okay? Is NASDAQ more dangerous? I don't know. How would you define danger? I like things that move quick. There's no such thing as too far. I just manage my risk and I hope it moves quick. That means that's less time I'm at my computer. All the little lines that's drawing over here, it's probably blocks because they're not turned off. I was just playing with throwing order prints on there. Forex has nothing to do with the U.S. market. I mean, it's a global web. Now there's an hour where you won't get any volume because the futures FX aren't trading. So for that 1 hour, you won't have any data. But when it reopens, then you'll have volume data on Forex again because we pull it from the futures Forex. What you do need to be aware of on major magnets. Let's see, you're saying that here's an OB chart I was referencing. Are you calling a deviation level a major magnet, or are you just saying that it happens to also, like you've looked back on the charts, that is a major magnet? John? Okay, so a deviation is not a major magnet. I mean, it's a magnet level in the sense of price is drawn to it, but it's not like a major magnet. It's based on really high volume on 10-minute charts. So looking at your order print chart, let's see if we can see anything. Okay. What do we got here? Let's see, where was your entry? Trying to find. Okay. Right around 10:30. You got in 1092, give or take. 1.092. Is that right? These are both 10-tick charts, so that's why I'm sort of confused. I'm going to assume this is the bar right around here. So what are you wanting me to say? Like, what answer are you looking for? I guess what's your question is, I guess, the ultimate. John Mike Smith, what is your question? When approaching the deviation? Gotta make sure we're using the same words, okay? Let's see. I mean, there was a good setup. I just lost. What deviation is that? You sort of cut it off. Is that bouncing off a negative 0.7 going up to 0.5? I'll talk about the cluster thing in a second. So yeah, I mean, it's a good setup. So I mean, you had your star right there showing that you had momentum. You had leading volume going on, like on the previous couple bars right there. That's what the blue means leading volume. And you even had some, trapped orders. The sell side, a lot of trapped orders on the sell side over here. Still had a little bit of leading volume. So I mean, I'm just trying to look at everything. Your point of controls are like sort of hard to see. There's your point of control. I'm guessing that's your point of control right there. And you got mini magnets, which the market's pushing off of. The biggest thing I see right here, and this is sort of an order prints thing for you. I'm going a little off of C's, okay? Let's check this out. Right here. Do you know what orange means for the net volume there? Do you know what that means? It means divergence. Yeah. Um, so that actually means you had more buyers than sellers, but the bar closed down, which is very often a reversal trade. So you had more buyers, but the bar closes down. That's a nice heads up. That's a can be, and with combined with something else is a very big confluence piece. So you could say it confirmed the elevator. Yeah. So, but basically what that's saying is the buyers are winning even though the bar closed down. And that can sometimes be like that could have been and I'm just giving you an example, that could have been a look for a buy off of the 0.7 type thing. So just giving you a couple ideas. Okay. So it just like that literally means more people bought than sold, like came into the market to buy. And the bar closed in the opposite direction. In this case, John, there is nothing you could have done about that trade. I'm sorry. I wish I could tell you some magical answer that would make it all better, but there's not. See here, I'm trying to see your entire. I know that's what you want. That's what we all want. But let's see here. Trying to find the trade again. I mean, the only thing I could say that might be a heads up And obviously this bar closed down with momentum going in the other direction. Okay, so that's one thing, right there. See momentum going in the other direction, going short, not just a down closed bar, but momentum short. So you had exhaustion of buyers, you had exhaustion of sellers, you had divergence. Comes up, come over here, and you get momentum going short, and your VAD flips. So where was your stop? Where'd you put your stop at, John? Did you ever move it? Or did you just leave it there? Okay, so I guess the answer is you did not move it. Is that right? You did move it. Okay. So where'd you move it to? Oh, you didn't move it from the chart. So the two things that would have made me want to move and tighten my stop up would have been one, I would have moved the predictor. You know, I am about predictor lines right there. Okay. Two would be seeing that acceleration down would make me want to tighten my stop. Which should have lowered your risk significantly. If you got in here and got out like there, tighten means my stop loss was first here, and now stop loss is right there. It means I literally move my order up here to get out if price retraces to it. Same rule I use on everything. 3 ticks below whatever it is I'm using for my trailing stop. So 3 ticks below the predictor on every bar. Boom, 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 no matter what. Okay. And then, I mean, based on the charts you're looking at. Okay. So based on your chart, what you're looking at, 3 ticks below predictor over and over again. Beyond the MVP arrow, the acceleration down. Sorry, the correct word would be the momentum down right here. 3 ticks below the low of that bar. Does that make sense? I'm not talking about Lori. I'm telling you my answer. You want to talk about Lori? Ask Lori. I'm not going to debate Lori and me. We're both great traders. We both have our own ways. These are my answers to how I would trade this. So you asked, how would I define tightening it? Okay, trading is not just system. It's ABC 1, 2, 3. You need to read the market too. You can just trade the system, and that's fine. But if you want to go the step further, you have to read the market. That's why you have order prints up. Otherwise, shut it down. Because that's about reading the market, right? That's the whole point of order prints is reading the market. It's about confluence. What do you see backing up your trade? I see a divergence. I see exhaustion. I see acceleration. Hey, I got a C's entry. Okay, I'm taking it. Boom, I go. It came back. It did it, elevator, whatever. I take the trade, tightening my stops with predictors. Okay, because that would be a good reason to tighten the stop. Also, when those get broken, closes below. I said it 3 ticks below that. Okay, but then I see an acceleration in the other way. Is that a good reason to tighten my stop? And that's part of what I want to talk about today on order prints. But I'm sort of getting ahead of myself on this. But is I want you to, John, I want you to expand past A, B, C, D as a trader. Okay? And I want you to clear your mind and go, what do I see? Not what do I think? What do I see? I see that I had an acceleration to the upside with a lot of great confirmations, and I took the trade. Awesome. But then I also see that right after I took that trade, right into a deviation level, by the way, like you said, I get an acceleration going down. Do I feel comfortable leaving my stop way back there still? Or is that a good idea to set my stop a few ticks below that bar? Because, hey, we're at a deviation. We just got a confirmed acceleration short, and the acceleration is that red star on this 10-tick order print chart. Is that a good reason to tighten my stop on a long trade? I'm at a deviation level, and I got an acceleration short. And if it causes, and guess what? You know what, if it causes another elevator and not a reversal, then what are you going to get? You're going to get another entry, and you can take that one. But now I've lowered my risk. I don't need to be right. I don't need to win. I need to protect my money. I grab the next trade. I don't care if I had a loss. Why do you care if you had a loss? Are you risking too much money? You should be able to take 6 net losses in the day and be psychologically undisturbed from it. You shouldn't be any more elated on a massive win, and you shouldn't be any more depressed on a loss. Well, it may take 2+ wins if you don't tighten your stops. And if that's not working for you, then don't scalp. Right? If scalping's not working for you, don't scalp. Okay? Then don't scalp. I mean, that's the best answer I can give you, John. If you're looking for, I want every trade to win, you're in the wrong spot. If you're like, but I took a loss, well, yeah, it happens. I don't trade for 10 ticks and risk 20. John, it sounds like to me you should not do scalping, where you have more risk than reward, because it's not psychologically fitting what you're comfortable with. And so what's happening is you're now going to try to over read everything on the chart. I don't not take a trade because there's a deviation level. I mean, we just had another trader post up here that they trade C's and they don't scalp at all. They trend trade. But if you're trading with a 10-tick profit and a 20-tick stop loss, the odds are against you. Not saying it can't be done. I don't trade that way. I don't like that risk reward. I'm not going to trade that risk reward. So if that's not working for you, and if deviation levels, I mean, they're all over the place. So you're going to be like not ever taking trades ever. So, I mean, really, my honest, just, and I'm not, as you can tell, I'm not trying to give you like a sales pitch. I'm just trying to say, if you're trading for 10 tick profits and 20 tick stops, you're probably going to lose unless you're winning like a lot. Scalping makes you feel good because you take a quick profit, but it's cutting your profits short. Now, I know like Lori a lot of times she'll go in and she'll scalp, but she lets her profits run on the other part of her position. All the systems only address entries, and not every system addresses exits. Every single system addresses exits. So I don't know what you mean by systems don't address exits. Every single system addresses exits. Skeleton confirmed what? I mean, this is great. I love honest. I'm open. I mean, that's the whole point of me being here. If you don't get a question, I mean, you ask it again. Like, because I'm in a class and I raise my hand, the professor doesn't call on me. It doesn't mean I don't raise my hand again. There is no system for exiting. A system defines your entry, your stop, your trailing stop, or take profit. A system includes exiting. It's entry, stop, and take profit plan. So there's not an entry system and there's not an exit system. Entry and exiting is part of a system. There's no guidance for take profits anywhere. Okay, I don't quite know how to respond to that because I can point to hundreds of videos. Tighten stops at predictors. Have you never heard that in any video I've ever said? You've never heard me say tighten your trailing stop at a predictor, Errol? You've never heard me say my worst case stop loss is MVP? Okay. You've never heard me say when I see a bad signal the other direction, tighten my stop? Profit targeting is exiting. Tightening stops is exiting. Tightening stops is profit targets. It all comes together. There's not a single system you've ever watched where we don't tell you exactly how to exit. Right. The systems tell you how to. Well, I mean, there are some that tell you to take profit at 10 ticks because they're scalping trades. But yeah, all the systems are going to tell you to trail. You have to learn to read the market. Remember, I said there's ABC and there's 1, 2, 3. ABC is enter, stop loss, trail stop, which is for profit taking. 1, 2, 3 is looking at levels, which I have a lot of videos on. There's a lot of magnet videos on as well. like actual magnets. And I talk about an I zone, about how you can look at zones as profit target zones. Talk about how deviations can be profit target zones. I talk about how ICE can be a profit target. That's what the whole, remember, the very first step is levels. So if you want to, take profits at a target, then simply look at a target and go, is there a reason I should exit here? If there is, then I take part of my profits off and then I tighten my stops. But you have to read the market to make a target. It didn't just magically appear for you. Just because there's a line, I'm not just going to hop out of trade. I remember I said the word of the day is confluence. Well, a deviation level plus momentum down star on order prints. There is some confluence for me to tell me to tighten that stop up right away. Lori plays ping pong on a constant basis, and so do many other traders, without any big trends at all. And ping pong is where you target stops. The whole chop system in IZSS is actually based on taking profit when it hits the sun. So, you're telling me right now that we have no videos that tell you how to take targets. The IZSS chop, there's 3 parts in IZSS. And one of those is chop, and it tells you literally where to take your profit. And you have I zones plotted on here, on your C's chart. You don't got to be pickier with your entries. I'm not picky with mine. I just look for where things line up. They do. They do get broken all the time. I agree. Now, have you set your I zones to 20? Or do you still have it set at 2? Well, people do lose money just taking a profit because they take profits too small and losses too big, and they net. So people have lost money taking profits. But John, I think what you're looking for is you're looking for a magic bullet that says take profit here, and it just shows up on your chart, and that doesn't exist. But what does exist is the ability to read the market, and when you see confluence of multiple things saying, hey, I expect hesitation here because there's a deviation level, and because there's an I zone, and because there's a, whatever, moving average, and I also see short acceleration on order prints. When I put all that stuff together, well, the other guy's selling order. We can compare our P&Ls and mark 1099s, and we'll see who's right. But go buy theirs, I guess. Right. I'm not saying they're right either. So I'm saying you have to read. So there is the system, and then there is the style, and the style is just reading the market. And it's not becoming some market master wizard, whatever. It's just, is there a reason for me to expect that there may be a reversal here? And if there is, and it's going against me, that's a good reason to tighten my stop, or maybe even take part of my profits. You take the trade and you have 5 ticks to a deviation and you're nervous about that. If I could back up and look at 60, I don't have it all loaded. I'd see it doesn't look like we have an I zone there. But is there a reason for me to think it's going to slow down right there? Am I making sense, John? I'm not trying to push you off. I'm trying to like really give you what I'm hoping is one of the most honest answers you've ever heard. you know, in trading. And I don't mind argument, like in the sense of like I think that's how we a lot of times come up with our best solutions. So I had in college that loved me because I would argue with them until I got the answer right, and I had ones that hated me because of it. I'm one of those that I love you when you argue with me. I mean, Lori knows it. It's like we're like siblings because we'll argue stuff out like sometimes I get pissed and I hang up. But I mean, it's good. Right, the reversal, correct? Yeah, I didn't. Let's see. Let's pull it up first because I'm focusing on. John, is this from today, by the way? Okay, cool. Let's look it up. Of course, I'm not on your chart. Let's see here. I love it when that happens. Oh, try again. No, I'm not gonna boot and clear all my data. I haven't cleared my cache in a while, so that's a shame on me. But let's see here. Where is this trade at? What time is this trade at today, John? I love this. Like this is the real stuff. It's not just oh look at that perfect trade. Even though you can see a lot of awesome trades. But where is this trade at? Oh, am I? No. You can see how much I've been trading NASDAQ. We're on 12, aren't we? Let me see here. Give me 1 second. That's why I'm not loading my volume. Doesn't get more real than that. Let's just do it this way. It's not in my instrument list, so I don't know what it's going to do when I do it, but I'm going to try it. That is not an invalid instrument name. 6E. Oh, I'm ahead. See, I already changed all mine over. Yeah, we're still in June. Okay. Like, seriously. Just manually add it. Okay. Give that 1 second to load, okay? I've already rolled all mine. I like my chart better, by the way. 917. Anyways, we'll go back here. Why haven't you rolled? Okay, so we're pulling it up. You got your eyes on there. Goes in. You do have a power line right here. So you were trading right into a power line level. That was there in advance. See that right there? That P? That red line, that's the power line. Sort of carries it forward with that, with the green dots that Lori's using there. You know, over here on the bad divergence, unfortunately, that's why the one bad like died off, flipped. Which, by the way, gave me a great short. But there's a lot of good trades on this chart. We're focusing really just on this one. And I mean, this one went down to a deviation and stopped. That one went up to a deviation and stopped. Down to a deviation and stopped. Didn't quite hit the deviation, blew past the deviation. On light volume, no less. That one right there. So, I mean, that was right into one and it went right through it. I'd have to see a picture with your question. So, I mean, there's no reason this thing couldn't have moved all the way on back up to settlement. But there's also plenty of trades on here that you're not highlighting that are working. So if you seem to always be picking trades that go into a level that are losing, then stop trading trades that go into a level. Does that solve the problem for you or not? Yeah, I mean, there's a vast short right there. Again, I like bad better on continuum bars, but there, got divergence when it finally flips right there, and then you get a short. You even had it do a pullback trade. I don't use the 8 or I don't use any crossovers of EMAs. I didn't design this huge chart. If you want to ask me questions, ask me about IZSS. Ask me about order prints. You were asking the wrong pro. But that works for you, go for it. If you found it to be a strong magnet, then you traded right off of it and pulled right back to it. So it did what you should have expected. Okay, John. I mean, what do you want me to tell you? I'm trying to answer your question. I'm trying to not blow you off. That's why I've stuck on this for, I don't know, 45 minutes now. Like, what do you want? What do you want? Because I do teach about targets in multiple videos. I teach about trailing stops. What are you looking for? By the way, it wasn't a 26 stop where I moved it to, it was a 12 tick. So you said this was still a 26 stop? That's a 12 tick. If you put it 3 ticks under that, that's 12 from entering 3 ticks above here. That should be 11 if you entered like 3 ticks above that line. I mean, I'm really wanting to answer your question. I'm not wanting to be off-putting. I wanted to, like, if you got in here, okay, and you got out 3 ticks below, moving your stop up, I don't care how high it went. I care where I got in. You're never going to capture the high. You're always going to leave money on the table. Don't ever expect to pull 100% off the table. That's a trading in the zone thing. Don't ever do that. My goal is not to get all the money. The best traders in the world pull 30% of a trend, big or little. 30% and you're rich. That means they leave the first 30% and the last 30% usually on the table. If you want profit targets, then you have to learn to read the markets using things like order prints and the analysis like I've shown in a lot of videos. And even more recently in videos from like last week. But I mean, ICE is a profit target. I mean, you got to go like, okay, this is my profit target. If you're like, I'm really nervous about this trade because I'm about to go right into a deviation, then just don't take it. Or ignore it and just accept the losses. And if that's not working for you, then don't trade that trade. But definitely don't trade a system for 10 tick profit, 20 tick stop loss. You are not going to be net profitable. I think there's wisdom in focusing on one market, nuances of that market, but also having other markets up so you can see correlations. Yes. Like if I'm going to focus on NASDAQ, I'm going to have up the other 3 indices. Right? If I'm going to focus on oil, I'm going to have up natural gas, I'm going to have up dollar CAD, stuff like that. I don't mind you dominating the conversation. I'm here to answer your questions. That's what these are about. And understand that a trailing stop is not meant to be like the only way you get out of a trade. It's meant to be a way to lower your risk and ideally help you make a profit. That's the first step. Lower risk so you survive long enough to come back tomorrow. Ideally make profit, okay? And then figure out how to maximize profit, which is reading the markets. But if you just try to read the markets and you don't have a system in place, you'll trade solely on gut and you will have different results day after day after day. So you have to have a system. It's a balance. Some people go, oh, it's all system. You know, it's all like, I'm going to automate this 100%. And some people are like, you just got to read the markets, and I can just look at the price action. I can tell you everything's going to happen. Okay? You got to be right in the middle. Right in the middle. You have a foundational system. You have to learn that first. It's just part of trading. And then you have to back up. And once that's just boom, 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 then you can back up and think. Because at first you're so overwhelmed by trying to read every little arrow that you're not thinking, you're just trying to do what the little thing on the chart says. Right? I mean, but you have to do that first because you have to get it down. But then you back up and go, right? You know, apex short, awesome. I got an apex short, awesome. I got another apex short, that's fantastic. I got another apex short, that was really a small one. Oh, and we're at a 1 deviation. Right? So let me see what's happening over on order prints. Might want to take some of my profits. Definitely want to tighten my stop. I don't need to leave it all the way up here at the predictor. Like, I may leave half of it up there. But on at least my other half, I want to tighten that stop up, and I might even want to just take some profit right there. If I don't see something, happening, like, I mean, right here, I see volume really strong, got weaker, which is sort of a long signal, technically, but we're staying short because we got short bad. It's a little bit stronger, yeah, a little bit. I mean, on the down move, but I mean, we're not like massively increasing. We're hitting a 1 deviation. We know there's only 30% chance it's going to go below that. Is that a good reason? Is that and that maybe that's sort of the way I can put it to you. Is that a good reason to take profit? If it is a good reason to take profit, well, then it's okay. Don't take it because you're scared. Don't take it just because there's a level randomly somewhere, okay? But based on the facts of what you know and looking at everything, and maybe at least tighten it up to, the high of this bar. If it's a reversal bar, put it a few ticks above that on at least half. Protect those profits. Tighten it up. If you got in on this E, I mean, which is basically the exact same thing as getting on right here, going to that deviation level, yeah, I can see why you'd be a little bit nervous. I'm not saying I wouldn't take the trade, but I can see why you would be nervous, okay? And you need to be aware. Like, when I'm going into a level, there is a high probability that I'm going to meet resistance, okay? It may oscillate around a little bit and keep going, or it may reverse. It's probably not going to go straight through it. Okay? So when I get into that trade, I should expect it to take a while. I mean, if you were taking trades going up to this, I mean, you see these level come up, hit here. Basically hit this twice. This is the third time in a row. We're talking a triple top at this point, right? Maybe it'll break through it, or maybe it's just going to hold it and really be a strong reversal. But I should expect resistance. Second time we've hit it, we got resistance. Third time, the resistance happened a little earlier and then finally broke through. I'm very light volume, by the way. So it can break through. But if I can back up and go, I expect this, then I can choose to tighten my stops. I can choose to be patient. I can choose to put on a hedge. I can choose to take profit. I can choose to say, I don't want that trade. But it's because I see something that gives me a reasonable cause for hesitation. Not just because there's a level, but I mean, just looking at everything, backing up on the chart and going, hey, it's hit that level twice. We're going into it for the third time. I should expect a battle. This thing is either going to pop or it's going to reverse. Like, obviously it's always going to go one way or the other. So I'm not trying to just make it that simple. But there's going to be a battle and it's going to move off of it. So I need to understand I'm going into a battle zone. We did go into a battle zone. And that's why you had all that momentum, right? And then it pulled on back down. So I'm trying to get you to back up and be aware and think past the system. The system is going to take you to a point of discipline that has to exist for you to be a profitable trader without hesitation. And then the analysis is not gut, it's not news, it's not what some bobblehead says on TV, it's not fear of P&L. I've noticed that when I try to take an elevator right into a zone, it usually doesn't work. I'm not saying that. I'm saying, Mike, you've noticed that. Well, you have your answer. Don't take that trade. Actually, look for a reversal setup. And that was step 3 of what does it take for me to go long or for me to go short on the 4 steps. I don't think Natick changed anything with the daily spreads. I love how Natick sounds the daily spreads. I don't see why they would change them. So you could always ask them to make a wider daily spread, I guess, to put on more. But I mean, you gotta figure out how can I use this to my advantage. So the high premium in NASDAQ, that can be used to your advantage. If you don't like it, don't trade NASDAQ on Nadex. They're not going to look at one screenshot and make a change to the spread. They're going to have stats over. I know because I changed a lot of the contracts. And we pulled stats over a year when we changed all the binary strikes and how they were spaced out. I didn't change them, but I sent them the report and they changed them. If you've not gotten into a trend and you think you're trading within a zone like between a 0.5 and a 7, then trade between the zones and take profits, which is how I teach chop on IZSS. Link there, because I can't click on it. There are 2 divergences. Okay. First has a big trend in the middle. Okay, well, I only look at the divergence that lines up with the trend direction I'm going, but okay. So I have that divergence, which shows up whenever you have the elevator entry. The short divergence I wouldn't pay attention to until that E went short. So the bigger the divergence, the better. Like I would say if I was going to give it a rule, I'd say 50% is ideal or better, greater. I'm not quite sure if that was 50% or not, but they seem to be better entries. But I've never really thought about resetting it or anything like that. I mean, I do looking forward to actually be, but I'm after also taking little ones and then just fine. So, but I completely see your hesitant. Hey, I got a VAD set up. I got an OP, like several things on OP saying, hey, keep on going. Everything's telling me to go. The one thing that's in my way is, this is a resistance level from earlier, and it's also a deviation level. So I got a lot of longs, but I'm gonna have a battle going into it. Be aware of that, and then make your choice of whether or not you're gonna enter, because you're gonna suffer through the battle before you get to come out on the other side if it wins. I see a flat MVP as chop. The MVP predictor is what you're referring to, the predictor arrows. Yeah, they're going to happen during chop, and that's what has to happen before you'll see the MVP turn around. So, yes, that basically, now, I mean, sometimes they just flip, obviously. But yeah, when they go flat, you're usually not seeing the market trend. So when you see them start moving, you're in a trend. So very good. Yeah, that comes from one of our MVP videos. There we trained on MVP, like when it was a system in itself before it became more of an analysis tool. Excellent observation. So over here, MVP was already trending. So you're already in the trend. You just happened to unfortunately hit the top of it, and that's just the way it went. But at least if you're going into it, like I said, you can be aware of those two things. I don't want you to so be like scared of going into a deviation that you never trade. But I do want you to be, I mean, you can just see right here, like even on the 0.7 in between, see that right there? And it finally broke out. It went on down to 1. And when it came back, I mean, like even when it, like there's like a little oscillation comes out, and we even get that tail wick right there, like where it's having a battle. I mean, this whole battle right here is on the 0.7 deviation. It's easy to ignore, but right there, that whole battle's on the 0.7. Did y'all learn anything from all that? I mean, I know that wasn't like that. It was one of those ideal analysis things, but I think it's good to have, you know, hey, this trade's kicking my butt. Why? Is there anything I can do? Do I just got to accept it? Or is there some way I can be aware of it? Not just have, oh, look at all the pretty entries. And then, John, most importantly, being yours, did that help you? We can give you a couple ideas that you can even maybe scroll back on the chart and look at and see how that can help you. Because I know it was mainly your question that we were focusing on there. All right, and don't give up, man. I mean, if it's not helping you, all right, keep coming at me, okay? I mean, the goal here is to make it work for you. So, but I appreciate you bringing up the trades. Like I said, there's still plenty of trades on there that are good, but I see your challenge on the trades going into the levels. And now that you're just aware of that challenge, especially if you see that it's already been bouncing off that, then at least you'll know, I guess, what you're in for. So, but I mean, I trade into them, but again, I mean, I would have taken that trade. I got to tell you this straight up, I would have been all about taking the trade because there were so many things that said yes. So, like, I mean, I'm right there with you. Like, I would have taken it. I mean, 12 takes, loss. That sucks, but would have been all over it. But I also would have been aware, like you said just now, it's a little bit riskier because I know I got a battle coming up. But there's so many things that can go wrong. The one thing I can say, and this is, and here's the problem is, like, what you're tempted to do, and I think we even talked about this yesterday. You're tempted to do is you're tempted to say, okay, I'm going to let it break the level, right? And then I'll enter on the breakout of the bar that breaks the level. But then, of course, like it moves 2 more bars when you do that, and then it falls back the other way. So getting in later is really usually not a good answer. The best answer usually is either don't take the trade or be aware of the battle and accept the risk. And the more you can be aware of those battles, that analysis by using things like order prints and deviations and things like that, then at least you're prepared for it. So it's not like, oh, a loss. Because like if you would have taken this one, and maybe you did, and then you took this one, I mean, you're just like, oh my gosh, I'm just getting killed. Uh, So whereas if you're taking, like the VAT divergences and stuff, there's other trades in there. The apex entries, there's other trades in there, and that's one reason why you don't just want to use a putter or just use a driving, you know, club. I mean, you want to have a few different ones and just try to see the battles before you enter the trade. And that's when I talk about step one is look at the levels, because the levels are where should I expect the battles. And the next step is the volume. What's going on with volume. That's order prints. That's ICE. That's expected volume. That's VAD. Third step is going to be what is it going to take for me to take an entry and take an exit? Because now I'm aware of what I'm looking at. And then the fourth step is really going, okay, now if I would have taken this entry, this entry, this entry, where would my stops be? If I was a breakout trader, where would my entries be? And that gives you a real good clue of where the market would be going next and where it will turn around. That and that fourth step ultimately is your target training. Awesome. So that helped. Good. Not easy questions, and I'm glad. So I like getting some tough stuff. I think sometimes we learn the most from the most difficult questions. All right. So, is there any other questions in that section that I missed before I do maybe a little bit of an order print training? It may take a few minute break, but before we turn this off. All right, cool. So we're gonna call this one a wrap, and I guess we can call it,